Today, diabetic investor David Cliff joins us. Stay tuned for a show you won't want to miss. Hello, Dave. Welcome to our show. Nice to have you here.
Thanks for having me.
So tell me, what stood out at the J.P. Morgan conference to you?
Three things really stood out at the conference this year. Number one is that we have this gap in drugs. And what I mean by that is we have some very good late-stage development drugs like Byetta LAR, liraglutide. And then there's this gap in the middle for what I call mid-stage drug that it would be in phase 2 or phase 2B or phase 3. And then we have some interesting compounds that are very early stage development that look very promising and hopefully will progress along the line. So, from the drug standpoint, we have some, LAR to me is the most promising.
That's Amylin.
Amylin, most promising compound under development. Liraglutide, which is from Novo, another GLP-1, it's injected once daily. It looks like a very good drug, and I think we'll have some uptake there. But then, like I said, there's kind of this gap. There's really nothing big or exciting in the middle. But then we have we have a new class of drug called the sirtuins, and there's a drug from Citrus Pharmaceuticals that looks very promising. There's a connection to red wine, so it gets a lot of interest. People kind of can relate to that. And it looks really interesting, and so far in the early clinical work, it looks good. So on the drug side, it's kind of what I call a barbell strategy. You have late stage stuff, you have early stage stuff, but nothing really in the middle.
Is Citrus competing with Amylin? Because it seems like their target is obesity. Like
well,
Amylin
not
as well.
really. Amylin's so far along. Amylin has some excellent early stage drugs for obesity. They have pramlintide with leptin. That combination looks really exciting. It's very early stage. Like I said, all these the problem with early stage drug is everything can look really exciting, but to make it all the way through the process, it's going to take a long time, and B, you never know what's going to come along. But Amylin has Arena is another company that has obesity drugs, Orexogen, Vivis. But a lot of these compounds, other than the Arena compound, is early stage or mid stage. Quite honestly, the most effective weight loss drug that we've seen has been Byetta.
And how long did that take to get to market?
Byetta took about 20 years when you look from actually idea to all the way through. And
it's a long time.
it's not an easy process, and it was made more difficult because there was no such thing as a GLP-1 that had even been considered by the FDA. It's not like, Januvia is a DPP-4 inhibitor, and that's from Merck, and it's doing very well. And now there's a drug from Bristol Myers and AstraZeneca called saxagliptin, which is basically a Januvia wannabe. It's another DPP-4. When you're the first drug of any category, of a new class of categories, and the FDA doesn't have a path to follow, it takes longer. So like Byetta really blazed the trail for GLP-1s, made it easier for now Novo, who has their GLP-1. Roche also has a GLP-1 under development that looks pretty promising. So all these companies that have GLP-1s in their pipeline, their life has gotten a little bit easier because Amylin did all the heavy lifting, and now at least the FDA says, okay, we kind of have a baseline, we have an understanding of this compound, and so now there's a comparator. And that's the same thing like with saxagliptin from Bristol Myers and AstraZeneca will be compared to Januvia. And so they have a marker now, they have a comparator. And I think that makes the process simpler in a way, because you're not blazing the trail anymore. I mean, and it's also true with devices. It's like one of the pieces of news that came out of the show was that Insulet, people who make the Omnipod, and Dexcom have signed an agreement to combine their two devices and try to develop an integrated continuous monitoring plus an insulin pump. And just this morning, Dexcom announced a similar agreement with Animas, who makes an insulin pump as well. So Medtronic, who's has both insulin pumps and continuous monitoring, which already talk to each other. So the trail for Dexcom and Insulet and Dexcom and Animas to get their product approved by the FDA has actually been made easier by Medtronic.
Right.
Because again, they did all the heavy lifting, and the FDA is not an organization that likes to take too many chances. Whenever you're brand new, they're going to look at you from 6 ways from Sunday to make sure that, like Acomplia, which is a weight loss drug from Sanofi Aventis, it was kind of a different approach, and there was a lot of concern over maybe some adverse events and depression and mood change and that kind of thing. So any compound now that follows the Acomplia path is going to have a really difficult road to hoe, because the FDA really basically said that we don't really like you. So, if you come along with a similar path as Acomplia, you've got to overcome already a negative just to get to even.
So that's interesting. If you get through, it's a good thing. If you don't like it, it's a bad thing for the upcoming drug.
The FDA does not like to take chances. It is a political organization. They're overwhelmed right now. They're understaffed, they're underfunded. They don't, I mean, even in their own reports that have been published, they acknowledge that the pace of change is moving too rapidly for them to handle, and they're just quite honestly under-equipped. I mean, it's one of the reasons why, you hear complaints now about compounds taking so long to get through the process. You just can't, they don't have enough staff. They don't have enough tools. Because of the conflict of interest rules, it's very difficult to find somebody who's in the research community who maybe does not have a conflict with the drug company or something like that. So even to find outside help, it's difficult, because if, let's say, hypothetically, you had somebody who was working with Amylin, well, the FDA couldn't put that person on the panel to decide Amylin's fate.
It's been said that industry professionals that work for these pharma companies will quit their jobs there. They'll work for the FDA. Then they become part of the process of approving the drug. They'll quit the FDA, and then they'll go back to industry.
Oh, yeah. I mean,
that seems to be, I've heard that that's a common practice.
Very common. I mean, it's just like it's like a senator who loses an election and becomes a lobbyist. Why is he doing this? He has access to other senators.
Right.
If you work for the FDA and you understand how the FDA works, like every organization has its methods and how they work. So if you work with the FDA and you understand the inner workings of the FDA, and then you go work for a privately held company, you're going to share your experience and say, hey, if you really want to get this done, you have to sidetrack this person and go to this person.
So Dave, let's talk about some of the blood glucose monitoring companies.
Well, at the show, Home Diagnostics announced that they were going to become the exclusive co-branded meter for the Rite Aid pharmacy chain. That's the third largest pharmacy chain in America.
And they're based in the East Coast?
Well, it's basically an East Coast, West Coast strategy. Rite Aid is really big on the East Coast, really big on the West Coast, and really nothing in the middle.
I see.
So they just, Rite Aid bought the Eckerd pharmacies.
Oh.
And so they've integrated those. So right now you have at the top you have CVS and Walgreens, which are literally mirror images of each other. And then you have Rite Aid in third place. And they basically had to get bigger in order to compete. And what they're doing with the home diagnostics meter, Home Diagnostics also announced that they have a no-coated strip now.
Right.
I think it's called the TrueSet, if I remember correctly. Which is, quite honestly, that all the credit for no coding goes to Bayer, because they're the ones who were the first company to really go out and promote no coding. And I think that's excellent. Now you have, Abbott has no coding, Agamatrix has no coding. It won't be long before LifeScan has no coding, because they all realize that it's one less step that the patient must do. I think, quite honestly, my favorite meter company right now is Agamatrix.
Why is that?
Well, they understand what the patient goes through. Their new Jazz meter is kind of nice because I've been using it for a little while, and not only does it have Bluetooth technology, so you can more easily download if you're into that kind of thing, but like even subtle things, like when your readings fall within a nice range, you get a little smiley face on the screen, which is like a nice little positive reinforcement for the patient. I kind of also like what LifeScan did with the colors. Even though it's just a meter, the whole point is that it's like a woman in a purse. They can accessorize. It's no longer a medical device. It's now you
can personalize
a consumer device. Exactly.
Right.
It's part of you. And
also, it's great for children.
Yeah, and and it's kind of like I think we all remember when computers always came in gray.
Right.
Now you can get colors. There's a company that sells those.
Well, Apple trailed the road for that.
Right, exactly. And so it became more than an electronic device. It became your computer.
Right.
And I think if it becomes your meter, the chance of you using your meter more often increases. Mm-hmm. So, that whole industry is faced with.
So tell me, is LifeScan still #1, Roche #2, Bayer #3?
Yeah, LifeScan United States-wise is the clear #1. Mm-hmm. Worldwide, they're very close to Roche, which is worldwide is #1. Roche is still #2 United States, Bayer's #3, Abbott's #4, and then you have everybody else after that.
Mm-hmm. Tell me about the closed loop pump.
All the pump companies are working towards a closed loop system. Now that you have 2 approved continuous monitors, and now that the continuous monitors are being integrated with the pumps, the next logical step that everybody assumes is going to be a closed loop system. Now, I think for my purposes, I distinguish closed loops in different ways. A true closed loop system means that the patient does not have to interact with his device. That means that the system is intuitive and it knows what to do. And a semi-closed loop system means that there is patient input. And the best way I can compare this to is that when I train for the marathon and I want to build carbs, carbs break down to sugars, there are days I'm going to want to be higher than normal because let's say I'm going on a longer training run. Under a quote-unquote closed-loop system, it would never know that.
Right, that's it. How can it be intuitive?
So under a semi-closed-loop system where I had input, I might say, I want to be high right now because I know I'm going to run 18 miles or whatever, and I
want to sustain your
blood sugar I'm going to
at a certain
burn,
level.
right, because I know I'm going to burn sugar as I go through the run. I think the biggest problem, quite honestly, with a really closed-loop system is that I'm not sure it's even technically feasible because so many things have to go right, and if one thing goes wrong, quite honestly, you could kill the patient. That's the sensors are good and getting better, but
so who has that?
Everybody's
working on it.
Medtronic's working on it. LifeScan's working on it. Roche is working on it. Insulet's working. Everybody's working.
Bayer, are they working on
it? Bayer has no interest in the pump business, only from a standpoint of, they would like to have more pump patients because they use more test strips. But Bayer has done I think quite honestly, an excellent job of concentrating on what they do best. With the Breeze and the Contour, of making testing a more friendly and easy experience. Whereas, I think most people without diabetes don't understand that a glucose test shouldn't be a complicated experience. And by just eliminating the one step of having to code the meter, you reduce errors by like 70%, and which is, to me, phenomenal. And it's one less step that you have to do. So I think, Bayer, I think, deserves a tremendous amount of credit. They really concentrated on what their unique advantage was at the time. And I think the sincerest form of flattery is that everybody's copied them.
Arthur Higgins, who's the president at Bayer, talked about their turnaround strategy and how effective that has been for them in placing them third in the marketplace.
Well, I mean, quite honestly, the credit to Bayer goes to Sandra Peterson. She's the woman who took over. And I think she's built a phenomenal team. And, this is a company that everybody had given up for dead. I mean,
right. Well, they did.
And they came back from the dead, and they're doing tremendous.
And they've diversified. He said that's one of their big. That's been one of their strengths too. Is diversification.
Well, I mean, they've
always the pump business, obviously.
They realize that quite honestly, the pump business isn't large enough or growing fast enough to support even the current group of players we have. There's no question that if I look down the road 5 years from today, we'll actually have less pump companies, not more pump companies. There's only 500,000, patients on insulin pump therapy worldwide.
And how many? Do you know how many are in the U.S. and how many are?
There's about 50,000 in the United States. And Medtronic right now has a 70% or 75% market share, depending on whose numbers you want to believe.
And what rate is that growing at in the U.S.?
Less than 10% a year.
So you've got 4 or 5 pump companies competing for less than 10%. That's a gross of 35,000 people.
Pretty much, yeah. I mean, the pump business, any injectable business, any insulin business is going to get a boost because of what happened with Amandia. So what everybody's trying to figure out now is we don't necessarily need to reach the type 1s to grow. Type 1s are not growing fast enough to support pumping. There's 4.5 million insulin users in America. Out of those 4.5 million, you have about, I think it's 2.5 million that are on Lantus alone, 1 injection or 2 injections a day.
Which is the competitor to the pump, the poor man's pump.
Well, Lantus was successful because a primary care physician could dose it easily. Whereas if you go on MDI or pump therapy, especially if you go on pump therapy is the most complex therapy there is. It's very effective once you master it, but it's very complex. You have to know how to count carbs, you have to measure your blood sugars all the time, you have to understand the role of exercise and stress, and there's so many things.
Do you think physicians lean towards not putting people on the pump because of that?
Of course, yeah. They don't have the time or the infrastructure to properly train a pump patient.
And are those people putting more people on the poor man's pump, which is a long-acting and a
Well, I think what those
insulin?
people are really looking forward to is Byetta LAR. I mean, the most serious threat to the pump business is LAR. It's a once weekly injection. I mean, quite honestly, what's simpler than let's say Sunday morning taking your injection? You're done for the week.
And that's supposed to come to market in 2009.
They're scheduled to go to the FDA either in late 2008 or early 2009. Based on everything I've seen, I think the product will be approved and it'll be ready by mid to late 2009, early 2010.
What do you think is promising with the insulins? Is there anything on up and coming that?
Not really.
Written about or talked about.
Lilly and Novo are both working on like U500s or U200s, and
why?
Well, with that, you can dose smaller doses. It would change the design of like pumps radically, because you would need a reservoir that holds 200 or 300 units for your typical patient, and would require some paradigm shift because if you're on U500. That means you take 5 times less than if you're on U100. So, there is some math involved here. But I think ultimately would make it easier for the patients because they wouldn't have to dose as much. And if you're severely obese, for example, which a lot of patients are, a U500 actually makes your life a lot easier because you're not dosing so much. I know patients right now that are on pumps that are obese, and they're using the largest reservoir possible, which is 300 units, and they're refilling every other day. Whereas like I use the Omnipod.
So you're using 150 units a day, or 250 if they're doing the 500.
Well, I mean, if it's in a
pump.
If you had a U500, that 300 unit would be equivalent to 1,500 units. So you times it by 5. That'd be the equivalency. So. you know,
Blood insulin.
I think that would be exciting. And there's a company called Biodale that's working on a faster acting insulin that looks very promising. You know, Mankind.
And how's that different? The Biodale, how's that different
Well,
from anything that's in the market?
what they're all these companies are trying to work on is getting the insulin to peak more quickly and then get out of your systems. They don't, you know, they want to avoid hypoglycemia. That's what everybody's trying to avoid. So if you know you're going to eat, they want the insulin to work, and then when you're done eating, they want it to go away. You know, and so it's not like continual delivery of insulin when you're on a pump. You know, if you're, let's say, an insulin-using type 2 or an MDI patient, the one thing you don't want to have happen is that, you know, if the insulin works, if it doesn't work fast enough, you miss your meal. You know, so the faster it acts, the less you have. Like right now, a lot of patients don't realize that, you know, if you're going to eat, you really should inject about a half hour actually before you eat, so that by the time the insulin gets there, your food's there. You know, you got to time everything. This would make timing a lot easier because the insulin would work more quickly, faster, and then once it did its job, it would go away.
And what other company?
Oh, well, Mankind has Technosphere insulin.
Oh, right, yeah.
And that's inhaled.
Timing is pretty bad on that right now.
Well, I mean, it's bad because, you know,
Of Pfizer.
Right, the failure of Zubra, and that really, I mean, in kind of a really strange, you know, almost perverse twist, that's an insulin that's actually pretty good. It works very well, but because it's inhaled, nobody wants to partner with them.
So how do you know it's good and it works well as opposed to the Pfizer insulin?
Well, if you look at the study data, Technosphere, which is from Mankind, was compared against the newer insulin analogs, you know, like Novolog, Humalog, Apidra, and it worked very well compared to those. And whereas, like, one thing I never liked about Exubra, you know, was that when they did the studies, they were always comparing it to the older insulins, not the newer insulin analogs. And I thought that was kind of I understand why they did it, but I thought it wasn't very realistic. You have to, you know, we have to get away from what I call Me Too drugs. You know, if you look, like, I mean, if you just use the short-acting insulin world as an example, you have Novolog, Humalog, and Apidra. They all do exactly the same thing. I mean, yes, there are little nuances between all three, but quite honestly, for the majority of patients, if you put it's almost like drinking light beer. You know, if you took the labels off the cans and put them in front of, you know, a person, they're not going to know the difference whether it's a premium brand or whether it's, you know, some store brand. And the same thing is true with short-acting insulin. I could put Novolog in my pump, I could put Humalog in my pump, I could put Apidra in my pump, and I'll make you a bet, dime to donuts, that, you know, my levels wouldn't change that dramatically at all. And so, you know, we need better, not similar. You know, one of the things that, you know, when I looked at Sactagliptin, which is from Bristol Myers and AstraZeneca, it doesn't work any better than Januvia. You know, to me, that's one of the if I had to say there was a problem with this, the way the system is that Me Too is not good enough. I mean, there's got to be a compelling reason. It either does it better or does it safer. But just to do the same thing, to me, is a waste of time and money. And, you know, the drug companies waste, in my opinion, an enormous amount of money trying to, you know, go for the littlest nuance, you know, because they figure that they'll go to the doctor and say, oh, look, my study shows that, you know, we're better than they are. And they'll come out with this narrow little sliver of data, you know, just to, you know, and I think to me that's ridiculous. We need better drugs that are safer. And until that model kind of changes, you know, I think it's ultimately bad for the entire population because, you know, they get confused. And I think that that hurts in the long run. I mean, diabetes is complicated enough. We don't need even more confusion. We need less confusion.
So Dave, what do you think are the hot stocks to invest in after being at the JP Morgan conference now?
I think I'll go from like least risk, I guess, to most risk. Kind of a missed category is how diabetes supplies and drugs are delivered. I was very, very impressed with the Medco organization. They're a pharmacy benefit manager. They have a great understanding of what a person with diabetes goes through every day, and they're going to be introducing some nice programs to help the patient become more educated. They have specialty pharmacists already that are working specifically. You know, they bought Liberty Medical. You know, they're a company that understands that in order for the majority of patients to do better, they need help. And so they're structuring their company where they're not just delivering drugs, but they're almost like a therapy coach in a way. And they have the size and the scale they can do that.
Are they the largest
They're the largest
largest
pharmacy benefit manager in the country. Another company that I thought was fairly impressive was CVS. They have all the retail pharmacies, CVS, Walgreens, Rite Aid, they all want the diabetic patient. And I think that what the good news here is that all of these companies have begun to realize that if you can educate the patient, they're going to have better outcomes. It's the only proven method for improving outcomes. And now what these companies want to do, which I think is a good thing, is they want to use education as a way to make them different than their competitors. And so all of those companies, probably, I'm not a big fan of investing in Rite Aid. I think they're a little bit too leveraged, too much debt. But as far as like a CVS or a Medco, those are two pretty good stocks and fairly conservative. Novo Nordisk is a tremendous.
Their stock just split.
Yeah, their stock just split. As Medco's, I think is either about to split or did split. Novo's a very well-run company. There's no question they are the premier diabetes company in the world. They understand devices, they understand insulins, they understand the patient, they have a huge history. Is
that what's given them a competitive leg in the U.S. market?
Well, what I think what's given
Lilly, since
Lilly
used to have a big
stronghold
on the U.S. market.
The shift from syringe delivery to pen delivery, has really helped Novo. I mean, Novo is a leader in pen delivery without question.
How much has that changed, though? It's still the syringe delivery.
When I first started running Diabetic Investor, which is over 10 years ago, pens had about 2 to 3% of the market. Now we're up to about 15, 16% of the market. Mm-hmm. And it's growing every day. Lilly just introduced 3 new insulin pens. Sanofi Aventis came out with a pen for Apidra and a pen for Lantus.
So that's modeling Novo's success.
Right, which is why Novo is suing them all for patent infringement. But what happens basically here is that everybody is kind of woken up to the fact that if you make delivery easier, people will do it. Kind of as a side beneficiary here is a company like Becton Dickinson, because they make needles and syringes. They make excellent needles. They're probably, the most widely acknowledged needle maker. And I think they will benefit from this trend towards more injectable therapies, whether it's Byetta, whether it's insulin, and BD is a very diabetes-centric company when it comes to that. They really, I call it understanding your knitting. They understand exactly what their role is, what they provide, what they don't provide, and they're very good at it.
Aren't they making pens for Lantus or?
They don't make the pens; they make the needles for the pens.
Oh, I see. Okay.
For them, it's a tremendous business because,
Mm-hmm.
people throw away the needles and put on new ones, and they have they do a tremendous, very well-run company, and again with a great understanding of diabetes. Everybody knows I'm a huge fan of Amylin. Amylin's all about valuation. Everybody understands that when LAR is approved, that it's a paradigm-changing drug. This could be a $3 to $4 billion drug, and you don't have that many $3 or $4 billion drugs in diabetes. So the question becomes, what is the stock really worth? Have people built in, that into the stock price? My path for Amylin is that their stock price is probably going to whipsaw with LAR news. And
what do you think it's going to go up to? It's trading at 35.
I would buy that stock at any price below 40, because long term, with their, the most ignored aspect with Amylin is their pipeline. Their obesity pipeline, even though it's early, it can be transforming.
That's because of the success of Byetta.
I'm sorry?
And that is because of the success of Byetta.
But I think what even more so is that this is America. Nobody wants to exercise. So, if they, if they have a choice between
a marathon.
Right,
you either don't exercise or you run a marathon.
Right. If you don't want to, if you don't want to exercise, here, take a shot. You can eat whatever you want. That's people love that kind of stuff. They love the easy way out. And I know physicians that are getting patients coming in asking for Byetta who aren't diabetic because they want to lose weight. So, I think that. So
would you say this is an aggressive company to invest in?
I would call it a mid-risk company because, if there's any stumbles along the way, one of the things that you don't know as you're coming, Amylin's, in a horse race right now, and they're about to make the stretch run, and you don't know what's going to happen. You don't know what the FDA is going to say to them. Everything looks really good now. The data looks good. The drug looks good. There's a lot of very positive momentum. But, we're about to have a change in administrations. We don't know what changes that's going to mean in the FDA. So, it's possible that the FDA will come back to them and say, we need to do one more thing. That would be interpreted as negative by the investment community and may hurt the stock. Conversely, if they are able to submit the drug sooner, that would be very positive. The stock would benefit from that as well.
And didn't they mention that there was a possibility that they would be?
There is a possibility. No company would even mention that if they didn't think it was a good possibility. So I think that knowing the company like I do, that they wouldn't have opened their mouths, only to insert their foot later. So so they're kind of a mid, I don't view them as a really high risk.
You've got Novo, Amylin, Medco, Walgreens. What else? Who else?
Kind of a higher risk category would be this new company, this Citrus Pharmaceuticals.
Yeah, that was an interesting company.
Yeah, well, this is really a case where I know a lot of patients like to invest in things they think are going to work. And, being a diabetic myself, I want a cure like everybody else. I'm also realistic. I know this is a business. The drug looks promising. It's very early stage. I believe it's, just entering phase 2. So it's years away. Data looks good. It looks interesting. But it's got all the right things for an investment, meaning that it's in the right category. They seem to have a nice management team. The drug looks promising, and they probably will partner with a major pharma company. All of these things add up to money, which means that the news flow, it's kind of like the election that we're in, positive news flow, negative news flow. Mm-hmm. When a stock gets positive news flow, you can see something's going, like when I sat in their presentation, you could smell the money in that room. It was just, you knew, everybody kind of knows what's going to happen there. Insulet was another company that was like that.
Right, that's right. Mm-hmm.
The Insulet presentation was very similar.
Let me just back up. You're recommending them as a buy as well, Insulet?
It's a risky stock, mm-hmm. but it's a stock that's, I would put in my high risk category, but there is a payoff there. And again, you get in this.
You're on the Omnipod. They're the makers of the Omnipod, and you're on it.
Yeah, I use it.
You use it.
I love it. I use it. It's great. There are certain things that you get a feel for when you're at a conference where, it's like positive buzz and negative buzz. You could, like, for example, like, just to do a compare and contrast, when I was in the ENewsletter presentation, and they have an obesity drug that's in late stage trials. Now, you would think if it works really well, everybody knows what a, excuse the terminology, huge problem obesity is, that people would be falling all over themselves to invest in ENewsletter. Yet they are not. So there must be a reason for that. You know, there's got to be something, you know, the data looks okay, but, you know, because of a variety of factors, too numerous to mention here, but because of a variety of factors, there's this, what I call inertia, investment inertia, meaning that what they once thought was really promising in early stage, now they're not so sure about. Whereas like a company like Insulet, for example, they've overcome some very significant hurdles. You know, they got their product to market, you know, they're getting great buzz, you know, patients are using it.
Their alliance with Dexcom now.
Right, very positive feedback from the field. So, you know, the investment momentum is building. And so those kind of things, even though they may not have directly related to, you know, what kind of happens with some of these companies is that because of their market capitalization, certain funds will not own them until they get bigger. So, you know, we saw this with Amylin as Amylin progressed through the years. You know, I mean, I remember the days when Amylin was a $6 stock, and this is, you know, many moons ago. And
it's gone up as high as 50.
Right, it's been over 50, but as each time its market cap got a little bigger, it qualified for new money to come in and own it. Certain funds just don't own stocks that have certain market cap levels. And, you know, it got added to certain indexes, and, you know, if you own a basket fund, it has to own the stock. So some of these things become, you know, you get good positive momentum just because of where things are going. And that's kind of like with any drug company, early stage development company, like, you know, Certuis, you know, one of the things I constantly tell people is that 80% of drugs never make it to market. So what looks really good today, you may never see it. You know, now that doesn't mean you don't invest in it. It just means that you have to be realistic about where you're going and what you're doing. You know, I mean, just using Exubera as an example, everybody, you know, when I first started covering Exubera, analysts were telling me this is a $3-4 billion drug. I never believed it. I never liked Exubera from the beginning. And, you know, as it turned out, you know, I was correct, the analysts were wrong, you know, but, you know, just because something looks really good doesn't mean it's going to be really good.
Dave, a lot of the companies that you've mentioned are newer emerging companies with the exception of Novo. What about Johnson & Johnson, Roche, and Bayer? Lilly,
well, you know,
Pfizer, Merck. What do you...
You know, when you look at, like, if you look at, like, Johnson & Johnson, Bayer, and Roche, for example, and even Abbott to an extent, diabetes isn't their core business. You know, Novo Diabetes is their core business. Johnson & Johnson, you know, they own LifeScan, they own Animas, but Johnson & Johnson has 29 business units that do over $1 billion a year in sales. I'm not saying that if LifeScan or Animas failed, it wouldn't hurt them, but it doesn't have a direct correlation to their stock price. Roche is the same way. Roche has a very nice, you know, in a strange way, Roche has a very nice diabetes pharmaceutical pipeline while their device division is suffering. And, you know, so they're so big and so diversified that although maybe the device side isn't doing so well now, a lot of people invest in Roche because they look into their pipeline, and they say, oh my, they've got this nice little GLP-1 that they're working on. They're partners with Ipsen, and they say, well, hey, you know, that's a growing category. We should, you know. So some of these companies, it's not like, you know, there are so few direct plays on diabetes.
And these are the ones that you're recommending in terms of a good investment, what we're looking at? looking
Right.
at.
I mean,
what's
I'm not,
risky,
I mean,
what's
you know,
long term.
Right. I mean,
Yeah.
listen, I love Johnson & Johnson. I think it's a tremendous company, very well run, great management team. They know exactly what they're doing. And it's a stock, in my opinion, would never hurt you over the long run. Same thing with Roche. I mean, although you can't buy Roche on the, there's no ADR traded here, but, you know, Johnson & Johnson is extremely well-run company.
And Bayer, you said earlier.
Well, Bayer's not traded here anymore either. So was traded on the New York Exchange. They no longer do that. I'm not a huge fan of Abbott. I'm not real impressed with their management team, but it's a widely diversified company. You know, it's we've gone through kind of a cycle here where some of these bigger companies have consolidated, and they've become so big, and they have so many facets. So many facets to their business units that what they've done in a way, they're protecting themselves from failure. So, like, hypothetically, just to do a home diagnostics is strictly a diabetes company.
Oh, HDI.
Yeah. You know, if, God forbid, anything went wrong with either the product or whatever, they're dead meat. I mean, you know, they have nothing else to fall back on. But let's say if you look
They seem to have moved on and found a niche in a highly competitive market.
You know, the problem with HDI is that this is a really nice company. They bring value to the market, but they're going to find a really tough road ahead of them because they're too big to be small. They're too small to be big. And even with this new agreement with Rite Aid, I'm not sure that they're going to be able to. Investors want a story of growth. You know, they don't want to see you doing the same old thing quarter after quarter.
So they haven't demonstrated growth.
I mean, and you know, quite honestly, what happens? I mean, you know, as good as this, I think this agreement is for them. What happens if, you know, Rite Aid doesn't promote it right? I mean, yes, it's nice to have the agreement. You know, it's not, but it's not like LifeScan, you know, who has this huge behemoth of Johnson & Johnson. You know, they've got marketing muscle, they've got money. I mean, you look on television, what do you see?
Distribution channels.
Right, you see ads for the One Touch Ultra and Colors. You know, you don't see ads for HDI on television. You know, LifeScan's got an army of salespeople that can, you know, go out there and promote the product to CDEs. They can give away thousands of meters. You know, HDI can't do those kind of things. Doesn't mean it's a bad company. It's just that means that they're a good company in a very tough market. I mean, you know, I'd like them to be a private company. Did I miss something?
Any last words, Dave?
No. Thanks for having me.
Thanks for coming.